Hello and good morning, listeners. This is Almus Market Mornings, rounding up the latest updates in financial markets with Jayaram Krishnamurthy. Now, folks, we've had another favorable set of inflation updates from the US. That is the PPI coming lower than estimated, just like the CPI numbers released a day ago. JK, we also seem to be waiting for the BOJ updates. The carry trade unwinding or the kind of policy change from BOJ shift should be also anticipated anytime during the day. What do you think of these updates on the BOJ front? We have already seen the carry trade unwinding hitting Mexican peso, and it's slightly going on in euro as well. So, do you think this will reach Asian pair? What should be the impact?
Good morning, Shikhar. Yeah, I think that's one of the expectations from today's policy meeting. So while they may not hike rates, they are likely to reduce their bond buying quantum, which is currently at $4 billion per month. And that could actually remove liquidity from the market and also lead to more unwinding of carry trades wherever they have big profit. For example, MXN, or rather the Mexican peso, was where they were running huge profits, and the political changes in Mexico actually led to the big unwind because there is a lot of uncertainty. Now the uncertainty is also creeping into Europe, where the rightists or the separatists are gaining ground. Which is why the French president has called for election by month end. So that uncertainty is also leading to unwind in the euro yen cross. Now, irrespective of what BOJ does, I think this carry unwind has just started, and it could go on for some time because you also have the US Fed going closer to a rate cut. While they said a day before yesterday that they would be cutting only once during the year, that was as per the dot plot, because many members did not take into account the lower CPI which was published on that day. Some did take into account, but if that was not enough for a confirmation of two rate cuts in starting September, yesterday's surprisingly soft PPI report was clearly below expectation. The all items or the headline PPI index was minus 0.2%. That's actually a deflation. And the export and energy index was flat at 0.3% expected. The softer PPI, and the CPI number actually could lead to May core PCE, which the Fed watches very closely, into a very, dovish 0.1% print this month. So all these things, on the one side, it puts the dovish expectations from Fed on the higher side, and it also leads to Japanese yen eventually gaining ground because the carry attraction is slowly reducing everywhere. So that is where the important decision of BOJ is awaited today. As I said, even if they don't change anything today, it still is a fact that yields are coming down, and the Japanese fresh investment into outside of Japan for carry may be coming down. In fact, data yesterday showed that they actually sold overseas security in a big way last month. So that's very now looking back again at the US data, it was not just the PPI that came lower. The jobless claims came at 10-month low at 242,000, the highest actually in last 10 months. And forecast was just for 225,000 and 229,000. The importance of this is that we are actually seeing a slowdown in the further confirmation of a slowdown in the economy. Ignore the NFP because there are other side of the report, household survey, which shows that actually the job creation was negative, and the unemployment report was actually at 4%. Unemployment rate was at 4%. So if you look at the overall context where the US economy is moving, this is another confirmation that the economy is slowing, and therefore it adds to the expectation that Fed will be cutting more than once this year. Of course, we will see more data, retail sales, and other things going forward this month. But I think as of now, the things stand. I think dovish expectations have increased, and Fed saying one rate cut was actually to keep the market expectations low. That's what it is. But market reactions, yields actually, came off again. And in fact, they came to April lows. And, the yield coming down initially helped a little bit to the dollar to come down as well. But then that was overshadowed by the goings on in Europe. There are two things that's happening in Europe. One is the political thing, which I already mentioned, the Eurosceptics gaining ground and the measures towards a stronger unification of European system is now going to be much slower. Second is Europe itself getting into kind of trade war with China. They're imposing tariffs on Europe, Chinese EVs, and this is actually putting risk on themselves, because Germany also depends a lot on Chinese Chinese materials and the export to China as well. It's a two-way traffic. So if Europe eventually does, because it has to be confirmed in the Europe Parliament, if they eventually do it, then there will be retaliation from China. So the trade war is not just to confine to US, China, it's also now between Europe and China also, apart from the political problems. So that's why the euro came off nearly 0.7% after the weak data from US focus more on the domestic issues, and that led to dollar index also gaining about 105. Once again, on the overall dollar, I think sterling is also facing some sort of headwind, because they are heading into an election. While they may not be cutting rate and this month, and the yields may stay higher, but still the political uncertainty also could play out, and that also may lead to Japanese and carry unwind. Now, coming back to rupee, not much to talk because it moved in a 2 paisa range yesterday, but as it stays closer to its all-time lows consistently, one gets a feeling whether we are headed for a breakout. But I think it's purely up to what the global markets go into. Don't ignore the fact that today again Chinese central rate fixing was at a new high from January 19. It was at 7.1151, and that's a new high in the last 5 years. And that cannot be ignored by Asian currencies. They may react eventually. The Chinese onshore yuan is about 7.5. So coming back to rupee, I think that's the thing. I think with all this uncertainty, markets are not selling dollars. It's only RBI who is selling the dollars. If any breakout in the global markets, it can lead to INR also weakening a bit more. I think it's really on a watch right now. Thank you.
That's pretty good, JK. I mean, yes, folks, there are a few developments which are moving towards some sort of action coming into the financial markets. Primarily the new Chinese fixing, or the higher Chinese fixing after a long period, can be one of the triggers that market participants are keenly watching on for the Asian pack. Apart from that, for the Eurozone, as JK mentioned, it's not just the politics, but also the trade war, which has started to build some sort of concerns, especially on the German front. But having to look at the US, or the US economy, the recent round of updates have nothing but ensured that dovish push from the US central bank can be expected sooner than anticipated. The overall releases of lower PPI, 10-month low of jobless claims, and unemployment at 4%, all of these macros are pushing for a probable dovish shift from the US central bank. Just last bit, that the change in stance by the BOJ, or the reduction of QE, which can lead to the reduced liquidity and unwinding of carry trades, is another key aspect that the market participants are keenly watching, and even this should bring about some good currency movement. So that's there. And folks, as we record, we have received the updates from the BOJ, and they have unanimously held the interest rates steady. But we will further look at what's the expectations on the QE. That's it for today, folks. We shall come back again on Monday. As of now, I'd just say adieu by saying, thank God it's Friday.
Shikhar, I have the update on what they have decided. They have decided to trim bond buying to allow long-term interest rates to move more freely. They will decide on the specific bond buying reduction plan for the next 1-2 years at the next policy meeting. So it's in the pipeline. They have not exactly reduced as on today. But you see, that's what they say. In the next meeting, they're probably going to reduce it. The dollar yen has not come down; it's actually gone up because some kind of discounted thing short term. But then eventually, I think what will happen to the yen because they are clearly showing the intention to allow yields to go up. Yeah, that's it.
Okay, so pretty much in line with the expectations, although not exactly the same. But yes, folks, that's BOJ. And just one small correction, we'd be coming back on Tuesday instead of Monday, as Monday continues their bank holiday uh, uh, celebration of Bakri Eid. That's it for today, folks. We shall come back on Tuesday. Thank you so much for listening.